Hello and welcome guys, this is Yasir Khan, and in today's video I will be talking about why we pay tax on pretty much everything and what we can do about it. Okay, so if you are in US and Canada or pretty much any other Western country and even in Europe, you will be, of course, you'll be paying a hefty tax on your income, first of all, and secondly, you will be paying sales taxes on anything that you buy. Okay, generally that's the case. Now in one country or another the rules might differ a little bit, but you can expect, if you're getting paid a decent amount, you can expect 40 to 45% of your income to go towards tax every single month or every single year, depending on what you're buying and earning patterns are. I'm talking only about people who are earning decent money, which means they're earning over $100,000 per year. Okay, but even if you are earning less than that, the government has a way of taxing pretty much everything that you do. Okay, if you buy cigarettes, of course, there's a tax on that. If you buy anything at the grocery store, there's a sales tax on it. If you buy electronics, if you buy pretty much anything, the government gets a cut. Now, the rationale behind the government doing all of this is, of course, because they want to raise revenue, increase revenue for themselves so that they can build roads and provide social services and do all of the stuff which helps the public. And that's fine. That's all good. You should contribute towards that. But it would make a lot more sense if you have the capacity to control how much you pay in taxes, without tax evasion, of course, and you have a say as to where your tax money is going, which most people do not have control over. Okay, so the first reason to understand why you pay tax on everything is because the government wants to raise money. It wants to raise revenue, because if it doesn't have money, then it's not going to be able to provide for the services that it provides. Now, for each country it will provide, the government is doing something completely different. In some countries around the world, the government eats up all the money and provides almost nothing in return. In countries like Canada, they return a lot of what they have taken from you back to you in the forms of roads, social centers, civic centers, education, right? Free healthcare, all that stuff. So it depends on where you are and how much you're paying in tax. That's the first thing to understand. The second thing to understand is that you can legally avoid many of the taxes, not all of them, but many of them, if you reinvest your earnings. So when you go to a 9 to 5 job and you exchange time for money, the government charges you a lot in tax, anywhere between 25 to 45 or even 50%, depending on how much you make, because this is the first time you are earning income. Okay, that very income. When you reinvest that income, a part of that income, because of course you will not be able to invest all of it, when you invest a good part of that income into something which makes more income for you, then the government taxes you a lot less, because it is your own money which is earning you money, and you've already paid taxes on the money that you invested into the assets which are now making you more money. Does that make sense? Okay, so the easiest way to avoid taxes is, first of all, to reinvest your earnings, your income, into something which is going to keep making money for you. For example, real estate, dividend stocks. You know what the different asset classes are if you've been following my videos. So that takes care of a lot of taxes. Most of the wealthy people do not pay a lot in taxes if they know what they're doing. And by wealthy people, I do not mean people who are earning $600,000 a year exchanging time for money. Those people are not wealthy no matter what society tells you about them, okay? Doctors, by definition, are not wealthy. They're spending 12 to 18 hours a day exchanging time for money, and that's not the definition of wealth at all. On the other hand, a real estate investor who has 100 houses out for rent, well, of course, then he or she is wealthy, because their money is making money. Their investments are making money for them, and for that reason, they do not get taxed a lot, even though they might have a net worth of hundreds of millions of dollars, right? So please understand that the worst case scenario happens to people who are making money, who are exchanging time for money, and for that reason they're earned income. Okay, the people who pay the least in taxes, generally speaking, are people who are investors and business owners. Okay, the other way to reduce taxes is to make sure that you don't spend a lot, but there's only so much spending that you can control. All right, you can't stop spending altogether, and the government knows that, and that's why they charge you part of whatever you're buying. They charge you a premium on top of that so that their revenue increases. So please understand, there's a huge difference between spending, exchanging time for money, and using the money you've earned and reinvesting that in assets. There's a huge difference in the tax rate, and a lot of people don't understand that. Another distinction I'd like to bring your attention to is that you only pay taxes on your income. You do not pay taxes on your assets or your net worth. I'm going to say it again. You only pay taxes on your income and not your net worth. And this is why people who have tens of millions of dollars in net worth might sometimes pay only 2 or 5 or 10% in taxes. Okay, on the other hand, someone who's earning $500,000 a year, even though they have zero net worth, they'll still pay around 50% in taxes. This blew me away when I finally figured it out. Okay, the government doesn't really care what your net worth is. All they care about is how much you earned in a single year and how you earned that money. Okay, this is why Warren Buffett, the second or third richest guy in the world with a net worth of $80 billion, he pays a tax rate which is less than his secretary. And the secretary is probably making around $60,000 a year. Okay, so please figure out your tax code. Around the world, the tax code is very, very similar. Okay, there might be a small difference here and there, but the general idea is the same. People who have money, who are living off of the return of their investments, will not pay a high tax rate. Sometimes they won't pay any tax, especially if they are real estate investors. Don't worry if you don't understand all of it. It takes a little bit of getting used to. And yeah, if you have any questions, let me know down below. Please feel free to like the video and share it with your friends and family. And tomorrow I will be coming back to you with another video. Thank you and take care, guys. Bye.